Hello, my name's Barbara Mainhart. I am the outreach coordinator here at the Alpha Center for Divorce Mediation. Today, we're going to be talking about reverse mortgages, myths, truths, lies. When are you a good candidate for it, etc. Many of our clients going through divorce have to do something with the marital home. Do they buy out the other person? Do they refinance? What do they do? This is another option that many people don't know anything about. And today, my guest is Jason Eichmiller. He is a reverse mortgage specialist, and he is very good at identifying whether or not this will work for you, which is a great thing when you know nothing about this subject. So, and Jason has been one of the resources that Alpha Center for Divorce Mediation has sent clients to since 2010, et cetera, to just talk and get educated and find out if this will work for them. So, Jason, I'm going to let you talk a little bit about who you are, what you do, and then talk about how you determine a person's candidacy, so to speak, for reverse mortgage. And at the end of this video, you will be able to see contact information for Jason so that you can contact him directly and have a conversation and get educated. So thank you for being with us today, Jason.
Man, thanks for Barbara. Awesome introduction. Thanks so much. Thanks so much for having me. Yeah, I'll give you a little bit of background. I've been doing reverses and specializing in reverse mortgages since 2008. And I've helped a little bit over 450, I think 461 seniors or something right around that number. And when you look into a reverse mortgage, you have to do it intelligently. You have to ask questions. You have to understand not only what a reverse is, which is really, it's very easy to explain it. We'll kind of get into that. But is this right for you? And is this the best thing for, like, out of your options, is a reverse mortgage the best thing that you can possibly do? After all, so people do complicate it quite a bit. There are, just like you said, Barbara, there's quite a bit of myths and misconceptions about them. We're going to bust the myths, though. So you watch this in its entirety. You will understand what a reverse mortgage is. And then if it's appropriate for you, fantastic. If not, then that's fine too. But you'll understand what it is, and you're going to get it from the horse's mouth. So yeah, I'm glad to be here and glad to help.
Great.
So do you want me to, do you want to start at kind of like a 10,000 foot level, like what a reverse mortgage is, and then we can talk about.
Yeah, let's just briefly talk about what it is, and then get into like, how do you figure out if you're a good candidate for it?
Okay, cool. So basically, I hate to disappoint you, but a reverse mortgage isn't that complex. It's a reverse mortgage is a mortgage where instead of being forced by the bank to make payment after payment after payment, you don't have to make payments. It's flexible. So we have some people who take reverses and they make a payment here and there. We have some who say, heck, I'm just getting some money out of my home, and when I sell the house or when I pass away, the money will be paid back. So you're just borrowing some money up against your home, and you're able to decide when you want to repay it, if at all. Now, that kind of sounds too good to be true.
Yes, it does.
It sounds like I'm a reverse mortgage commercial right now. Here's how it works. When you borrow money up against your house, for a lot of folks, what I try to do on a 10,000 foot view is, if you're in your 60s, you're able to take about half of your home's value. There are a couple of variables out there, but 50% is a good benchmark if you're in your 60s. The older you are, the more money you can get. The younger you are, the less money you can get. And they actually started, so the age to qualify for a reverse has always been 62, but now there's some companies that actually do it. They'll allow you to do it when you're 60. So a little younger, you can get in. So the way that this works, the way that I can say, yeah, here's some money, you don't have to make monthly payments, is the money does become due when you either pass away or when you sell your home.
Mm-hmm.
And believe it or not, there's interest involved. So no bank would hand out free money. It doesn't exist. I tell people all the time, like, I'm not Ed McMahon or Ed McMahon's grandson. I am bringing you money, but it does have to be paid back in the end.
Mm-hmm.
Of course,
Mm-hmm.
any bank, to justify giving you the money, they would have to charge you interest. So what happens is the balance goes up over the years. You never get, as long as you kind of pay attention and you check your mail once a month, you get a statement. It tells you how much you owe. It tells you if you have a line of credit, how much extra money you can borrow. So it'll never get away from you. And the rates they're either fixed or variable, but it can't get away from you. So as long as you go into this with open eyes and asking the right questions, you should be able to know. And in fact, what we do is we give everybody we work with, we give them an amortization chart so they can actually see what the loan is projected to do over time. So I'm not a fan of surprises, and you shouldn't be either when you're talking about.
No. Especially with people going through divorce, like the fewer surprises, the better. But
Exactly.
as an option for especially seniors going through divorce, it's one of those things that they've never considered. So like, we want to like bring this to their attention and through you.
Gotcha. So let's talk about, actually, before we go into divorce, I want to just touch on like kind of 10,000-foot level. So if you're watching, your understanding on a reverse is what my understanding on the reverse is. So one thing that people think, and it's a misconception, but there's so much misinformation out there. Sometimes people think that, yeah, we're going to give you some money, and in the end, the bank owns the house. Have you heard that one before, Barbara?
Yes, I have.
Gotcha. Fortunately, it's wrong. So we do give you money. At the end, it has to be paid back. And again, there's interest involved. It accrues. But the house will, when you pass away, the house is going to go to whoever you want it to go to. Kids, loved ones, church, whoever. Doesn't matter. It's going to go to whoever you want it to go to. They're going to get it. And it's the exact same thing as a traditional mortgage. So at that point in time, when your kids get the house, there will be a bill. The reverse mortgage company will say, hey, we want our money back. Pay us, please. So to pay them back, you either refinance the house, you pay it off in cash, or you just sell it. And if you sell it, whatever is owed gets paid back through the sale, and you get the rest. So it's good to, and doing this for so long, I think like, oh yeah, that's obvious. But I do, every week I'll speak to somebody who says, okay, cool, you give me some money and then the bank gets the house or the government gets the house. I'm like, no.
I've heard that over and over again.
Yeah, absolutely. So we'll bust up some myths in this, this little conversation. So those are the basics. It's money. It's not free money. You're able to take it. The amount you're approved for depends on your age and your home value. And you don't have to make monthly payments if you don't want to. Those are the core concepts or the foundation of this reverse mortgage. Now, why divorce? Why would somebody use a reverse mortgage when they're divorcing? So you could probably, you guys can speak to this better than I can, but the folks that have come to me and successfully used a reverse mortgage through divorce is when you have your home, traditionally, one spouse is going to stay, the other spouse is going to go. The spouse who's going needs to be paid. So how are we going to pay the spouse that's leaving? Traditionally, well, let's see, what can you do? You can sell the house, but then neither of you are going to live there. You can refinance the home. Works great for somebody who's still working like you or I. But if you're retired, number one, it's kind of harder to qualify for a refinance.
Yeah.
Number two, when you're bringing in fixed income, Social Security, pension, distributions, when you're on fixed income, suddenly incurring more expenses is really tough. It makes it very hard on the budget. So a lot of times when you're retired, a refinance doesn't work, and it's kind of scary to say, all right, I'm gonna pay my wife or my husband off, and now I'm stuck with this $1,500 a month forever and ever, amen. You don't look at your cash flow, but that might not be the smartest thing to do. So you can sell it, you can refinance it, or if you have money in the piggy bank, you can certainly write a big check. The challenge with writing a big check is you obviously probably see a lot, is you have, when you're not working anymore, the money, the assets that you have, they have to last for life.
Yes.
If you take a big, some people just can't write that check because they don't have enough. Others can write that check, but it would decimate
Yeah.
your retirement portfolio. Then
You could write the check, and then you could live in your car.
Yes, your CPA and your wealth manager will go and come over and strangle you, because not good. It's not good. You need to have a safety net. That's why we save. The other thing, if you want to go deeper down that rabbit hole, we have tax issues. So you pull out, if your investments are taxable, you pull out $200,000, $300,000, $400,000. Well, that's going to come with a pretty hefty tax bill on top of it. So you have all these options, but when you're a senior, a lot of these options are flawed. So that's where the reverse comes. The way that we use it strategically in a divorce is, instead of taking out of your assets, instead of refinancing, which is gonna, again, probably make your cash flow a little tighter, we take the money out of your house. There's ways to do it where you can get a lump sum to pay off your spouse. It's always easier than breaking it out into payments. And when you take the money out of your house, you're not incurring a cash flow issue, and your money, the money that's in your investments that's growing, that you have to protect, is staying there and it's protected. So that's where, I hope that makes sense. Like, this is where I see it working very, very well in divorces.
Wow. I think that's a great idea. It opens up another option, as we said, because especially, divorce after 50, it comes with a lot of other issues that might not be present earlier on. So this is a great idea for them to at least consider. And I think that, you know, here at the Alpha Center for Divorce Mediation, our goal always is, when they walk in the front door, we're looking at their new life out the back door, and we want them to land on their feet financially, legally, and their personal well-being. And
Emotionally.
so everything that we do here is, to help them. And so when an issue like this comes up during mediation, how many people, like as you said, are going to do anything and go like, oh yeah, well, I saw that commercial, and looks a little iffy to me. But the reality is that, there is a lot of research, and there's a lot of experience that you can bring to the table, and show them. And I am always in favor of, I'm going to start here. Now you explain to me what's going to happen on every step. I just sold a house, and doing stuff with it, and I sat down with a person, and I said, so if I do this, and he goes, oh, well, you haven't thought of this, and the next thing I know, I'm actually in a better position than I was going in, just because I didn't know. So this is something that we can bring to the table, and have people speak with you. And at the end of this video, I will put Jason's contact information up, And I encourage anyone who's considering this, um, or has been kind of, tainted by the commercials to to talk with him about how it can work, because there is the proof behind all of the details, and you can walk through it. So, Jason, do you have anything else you would like to add to this?
Yeah, absolutely. And first of all, just to speak on Barbara and Alpha, like you guys are an awesome center of influence. You like when you take in a client, because we've worked together, the fact that you guys try to bring in you guys are very, very good at what you do. You know what you're experts on, you know what you're not experts at, and you have the resources to find people who are experts. Just like you say, when you have somebody who walks out the back door when this is finished, they're in good shape, again, financially, legally, emotionally. They feel confident at where they are. And when somebody's going through divorce, like that they have this weight on their shoulders.
Yeah.
That they're staying up at night and they're thinking about this, oh my God, I've got to get this right. The fact that you guys get it right for them, and that they can walk out and say, I'm going to be okay.
Yeah.
That's awesome.
That's the goal. It's like, nobody gets married thinking that they've got to know anything or anything at all about divorce, but they do end up there. And so, all of the research and all of the people that we have encountered who help us, we want to make sure that those people, are available to our clients at all times.
Yeah, absolutely. Just one thing I'll caution before we go. Yes, there are a lot of reverse mortgage commercials out there. Fortunately, with divorce you can screw a reverse mortgage up. So I'm gonna teach you guys how to not screw it up. The good thing is that reverse mortgages are regulated by HUD and the FHA. So there's no gotcha out there. There's no bait and switchy things. Everything is put out in paper. Actually, to even do a reverse mortgage, a senior would have to talk with a independent counselor. And the counsel, like I get paid to help you with a reverse mortgage, and in the right situation, I'm very pro reverse mortgages. So you should know that when you're talking to somebody, hey, they get paid to do this for you. The counselor, though, could care less whether you do a reverse mortgage or not. Their goal is to educate you, to make sure that you understand what your responsibilities are. Basically, when you're done with counseling, and the way I try to prep folks is I want the counseling to be the most boring phone call they can possibly have, because they've already understood everything and they've already got the information.
Uh-huh.
So it's just a good way. Again, I don't want surprises, but the counselor is there kind of like as a safety net. So if somebody says, oh yeah, this is free money, you don't have to, never has to be paid back, don't have to live in your house, counselor will help. So
I was unaware of that step. That is very interesting that, that kind of safety net is put into place.
Oh, it's mandatory. And so again, I want my clients to think that after they talk to the counselor, man, that was boring, because I want them to already know everything.
Yep. So that is, as I said, I had no idea that step was mandatory, or that it existed. And of course, this is why you want to talk to Jason, because he'll make sure that you don't step off a cliff.
Yes, that's not fun. Nobody wants to.
Nobody wants to step off a cliff. So
yeah, I'm going to add real quick how reverse mortgages can be screwed up. Divorce, pretty important. So the right person somebody who can use a reverse mortgage to, I think the best of its potential is obviously as a senior, you've got to be 60 years and older or older. You have to have a lot of equity in your home, because you're using your home's equity. You don't get all the equity in your house. Again, if you're in your 60s, you get about 50%. So the most successful folks that I've personally worked with, they're either free and clear on their house, meaning there's no mortgage, or there's a very small mortgage. That means that they can utilize the majority of the loan to pay off their departing ex-spouse, soon to be ex-spouse.
Right.
So
Yeah.
where this gets screwed up is traditionally with a traditional reverse mortgage, your own, let's say you have a loan size of $200,000, just throwing it out there. With a traditional reverse mortgage, the way the rules are written, you're only able to take about 60% of that $200,000 up front. That makes it very tough for folks because now you have to have obviously an additional court order, more litigation. Nobody's comfortable. The departing spouse needs to make sure that he or she is getting paid that extra 40%. There's a way that we can use a court order to create a lien to get around that 60% mark. It just has to be done the right way. And I'm not going to bore you with all the details. I'll put you to sleep. But there is a way to do it to a point where the departing spouse can get 100% of the funds. And it just requires understanding between the attorneys and moi, or whoever's doing the reverse mortgage, just to make sure that the timeline's done correct, the paperwork's done correct, everything's done to a T. And it's not that hard. You just have to pay attention.
Yeah.
So,
And you have to know to do that. I mean, again, you're bringing up another point that, of course, I don't know anything about. And, and it's like, yeah, it's like, how do you screw up a reverse mortgage? Well, you can screw up a refinance if you put your mind to it. So,
yeah, and people just don't know. And when you talk to a lot of these commercials, I know this because I used to run a reverse mortgage call center back in the day before my hair was as gray as it is. And so what happens is these commercials, most of the time they drive phone calls to a call center, and the person on the other end, you don't know what their experience is. They could be rookies. Hell, I was a rookie once. I didn't, I started, I didn't know. So these people, this is when you're talking about a reverse, especially for divorce, this is high level financial planning stuff. You have to dot the I's. You have to cross the T's. You got to know what you're doing. So.
Because you don't really have any like backup options at that point. So because once it's done incorrectly, you're kind of stuck with it. So you better make sure that you use a professional who is looking out for you and has the experience to make sure that everything is dotted and crossed.
Yes, absolutely. Yeah, you can pay it off at any time. You win Powerball, you can say, all right, I don't want this reverse mortgage anymore. No worries with that, but it's kind of hard to do, and the odds aren't the greatest. So
no, they're not.
Yeah, absolutely. So yeah, I'm glad to help. If anybody has questions, glad to share my knowledge and my information with them. Not everybody qualifies for it. Obviously, you have to have a certain amount of equity in your home. You have to, believe it or not, this is what another thing people don't really understand is we do qualify you based on income. We do qualify you based on credit because we want to make sure that this is something that is going to work for you. We have, if you talk about people who shouldn't do it, we have people who their finances are, how do I say it? Like they're just really bad. They're a disaster. And doing a reverse mortgage, yes, it's going to plug a couple leaks, but the situation is really rough. So in some cases, a reverse doesn't make sense. So I try to when I speak with somebody, yes, we go deep into your finances. We go deep into your need. And people ask, well, why are you asking all these questions? I'm like, well, this is pretty kind of a big thing. And we want to make sure we get it right. Right. So just got to kind of take it as a case by case basis. But the folks who have used this, I mean, if you can pay off your ex-spouse and you don't have a cash flow hit and you don't have money coming out, like drastic amount of money coming out of your savings or investments. Again, we talk about what you do at Alpha. What you really do is it's peace of mind. It's getting that weight off of your shoulders and that's what I try to do too as well. When you're through this reverse, you can
Yes,
exhale.
yes, I can exhale. Well, Jason, I want to thank you so much for spending this time with us, and I can see me coming back and saying like, oh, let's expand on this little thought
Yeah.
here. And for anyone who's watching and listening, the information is right there. You can also call or contact me. My information will be there, and I will put you in touch with Jason. Again, Jason, thank you so much for your time, and thank you so much for all of the information. Now, like I'm walking away with 3 or more things that I didn't know. So,
Gotta
so
teach.
thank you.
Oh, you're welcome, Barbara. It's so awesome having this relationship. And for those of you listening, I mean, Alpha Resource Center, they're amazing, just wonderful people. And you try to align yourself with people who have the same values and goals as you, and they help everybody who they can possibly help. And it's an honor to be with you.
Oh, thank you. Well, I know that we're all on the same ethical road here.
Absolutely.
Thank you so much. Take care.